Hello there, Mavericks. This is Rob Reinhold. It is Tuesday, October 17th, and let's just jump right into where the market left us at the end of today. So we had an up day, but it wasn't a green candle. It was actually a red candle, which means that the market jumped up, gapped higher. So we gapped higher like 2% overnight. The futures moved higher all night long. We opened up 2%. And then we sold off, and we pretty much sold off until the end of the day. We got a little bit of a run. But as far as candles go, this is a red candle. This is telling us there's actually more sellers than buyers. However, we cannot ignore the fact that for the first time in 3 days, we have now closed above the 20-period moving average, which has been recent resistance. So we take a look back here. We say there's resistance back here, resistance here. So the one positive is, hey, we closed above the 20-day moving average for the first time in well over a month. That's a very bullish thing to happen. The problem is the candle that did it wasn't a real bullish candle. But that being said, you have to admit that we are now trading higher than the 20-day moving average, which means the prices today are higher than they've been over the average of the last 20 days. That's literally what it's telling you. So at this point, this is the strongest it's been on average for the last 20 days, which is telling you we are not going to fall off a cliff and make new lows right here, right now. So the question is, where is it going to go to? We'll get into that in just a second. But let's kind of do a breakdown on the day. What happened today was in the news, we got some news out of the UK. Liz Truss, she backed off the new tax cuts. The UK markets applauded that and actually got some strength to their markets there. The dollar was still strong. Yields were fairly mellow. So again, the dollar didn't make new highs today, and that's been putting a lot of pressure on the markets. But the problem is it didn't really sell off either. Same thing with bond yields. Bond yields didn't make a new high today, but they didn't really fall either. As long as the dollar and bond yields just stay where they are, I feel like the market can still move higher. The Kiwi was our strongest currency after a stronger than expected CPI report yesterday. And so, as you can see here, the S&P had an up 1% day. Now look, that's a good day, up 1%. We can't say that was a bad day. The VT up 1%. Crypto actually was up in the morning and then sold off pretty much all day long. Gold flat, oil down. So look, this was really a mixed day, but I want to go back to the charts because we have to look at price action. Price action is so key. It's everything. And we have broken through the little bit of resistance we've seen. And until we get up to about this 3,800 level, we don't really have any more resistance. We are trading above the 20-period moving average. Whenever we are between the 20 and the 50-day moving average, this is kind of no man's land. It's saying, hey, you know what? Prices are stronger than they've been over the last 20 days, but they're so weaker than they've been after the last 50 days. It's kind of no man's land. So this is where we find ourselves. That being said, the bullish momentum is still going. And I think we are going to get to that 3,800 on the S&P. That's 80 S&P points away. That's about 2%. And we actually did get some better than expected earnings out of Netflix. After the bell, futures are already trading up about 0.75%. So with the futures hold overnight, we've pretty much gotten half of that gap up to 3,800 filled just from the news after the bell. So I think we're going to run up into this 3,800 point on the S&P. And once we get to that point, we'll probably hit some resistance. Here is the VT, the World Stock Index, same thing. We are cleared out of the resistance of the 20-day moving average. It wasn't a great candle. A green candle would have been much more bullish, but we do have some room to run until we hit this resistance up here. Equities look like they have another day or two left in a run before they get challenged by the next level of resistance. When we come over here to the cryptos, they are just not responding. They have held support other than the pierce we saw back here on the 13th. It's held support, but here's the problem. Back here, we were just low basing. We were just going sideways. Since then, we've actually started to make more of a descending triangle pattern, which is bearish. The markets probably have to break down to new lows for cryptos to break down to new lows. but I just don't like cryptos here whatsoever. When we look at our score, we cannot ignore the fact that we are above the 20-day moving average. So the 20 MA is actually flashing a green signal, is flashing a short-term bullish signal. The problem is we still have it below the 50 and the 20-50 slope is still going down. This means that we need to move to a -1 on equity. Simply saying the markets don't look nearly as bearish as they did just a couple of days ago. We have to reflect this in the reality of what we see actually happening. Let's take a look and see what we've got over the next 24 hours on the calendar. And it's actually a big one. We have the CPI out of the UK. That comes out at 2 a.m. Then we've got the CPI out of Canada. Now, we talked about these this last weekend. We said, okay, these are going to be important. You see, 8:30, we have the Australia employment report. But I really want to point out this China GDP, because I think this is going to be the big report over the next 24 hours. This was supposed to come out on Monday, but it was postponed. At the last minute, it was postponed. And rumor was it was postponed because it's not a very good number. Now, again, these are just rumors. We'll see what happens, but we're going to get that number unless it gets postponed again Wednesday evening sometime. And if these numbers are really bad, it actually could be very negative for equities. If the numbers are not as bad as the market feared, it actually could be positive for equities. So I actually think this China GDP that comes out on Wednesday night, I actually think that's really the big story. It wouldn't have been such a big story unless it got this mysterious delay to it. So overnight, if you're playing the pound and playing the CAD, you've got to be watching the CPI. Now, we've been liking how the pound is traded. The CAD is dead, so we haven't been even talking about the CAD, so I don't see any reason why any of our traders would be trading the CAD, as it has literally just gone sideways for about a month here. Until that changes, we are not interested in the CAD whatsoever. As you can see, the news pretty much winds up on Wednesday. We have some small reports on Thursday, Friday, but these next 24 hours are going to be big due to these reports. So let's take a look at the currencies here. This is where we ended up yesterday in the velocity score. We had the euro showing us that it had the most positive momentum, followed by the pound. And we had the yen having the most negative momentum to the downside. Now, over the weekend, we talked in the currency room that if the market was a risk-on market, we thought that the yen would be the best short. And if the market was falling, if the equity markets fell, then we thought the Kiwi and the Aussie would be the best shorts. Well, the Kiwi and the Aussie have actually been really good performers this week because the equity markets have been so strong this week. So we are definitely looking at a risk-on environment, which means we do still like the yen short, and we were looking at euro and pound long yesterday. And as you can see, the cryptos were showing moderate strength, but we came out and said, look, they're showing a little bit of moderate strength, but it's just very short term. We haven't broken out of any ranges, so we had no desire to be long any cryptos. As I mentioned earlier, the cryptos actually were strong overnight, and then they gave it all back and went negative during the US session. So, pretty mild, moderate losses across the board. Over in the foreign currencies, you see the Kiwi. The Kiwi has continued to move higher off of that stronger than expected CPI report that we got on Monday. And you can see the pound, which we thought was actually going to be a good performer because it was showing some good momentum, it turned around after the news out of the UK came out. But euro was strong, Aussie was strong, and you can see that yen was weak. So we definitely like the yen short. So let's take a look at all these on the chart. I'm going to start with the US dollar here. Here's the daily chart, and you can see we made some new highs up here. We made a new swing high, but over the last 5 days, we've really just been in this very, very mild pullback. If we go into the 4-hour chart, we can see that this mild pullback has really been looking more like a base. So the dollar has been basing. As I mentioned earlier, the dollar hasn't been falling, it's just been hanging out here. This is a high base, and so in this high base, we expect that at some point the dollar will go sideways until it breaks higher. Until it does that, or until it breaks down this pattern, the dollar really isn't in play here. So the dollar is really at pretty much a zero here on velocity. It's just not really going up or down. We come over here to the yen. we can see the yen has a ton of downside momentum. At this point, we have to look at this and say this is one of the weakest currencies out there, or the weakest currency out there. However, we've spent a lot of energy. So what we like to do in Maverick is say, hey, you know what? We're going to wait for these little moments. We're going to wait for these little moments like bases. So this was a period of time, about 20 hours, where it based and then it had a big drop down. We're going to be watching for these little moments of a bear rally. So this, again, this is a 4-hour chart. So this is 16 hours of a little bit of a bounce, and it turned back down. We're waiting for our next entry into the yen. And you can see that over the past about 20 hours, the yen has just been going sideways. And we could be breaking out of the low of the base here really anytime soon. The yen looks ready to trade again. Remember, there's a burst of energy and then some consolidation. A burst of energy, some consolidation. Burst of energy, consolidation. We think the yen is very likely to break down, especially if the equity markets stay strong. So we like the yen quite a bit. We have been at a 0 for the Swiss franc for the longest time, and we are still at a 0. I mean, look at this. The EMA is going nowhere. It's flat. The RSI has been at 50 for days now. There's no reason at all to think that this is going to break out, especially with no news on the horizon. So we'll just ignore Swiss franc and move on to the next one. Here is the euro. You can see the euro is showing us some nice upward momentum, especially after we got this little pause here. So remember, things expend energy and then they consolidate for a bit. Take a look at this consolidation. This is from 4th all the way until October 14th. So this is 10 days of really a consolidation move after a big burst of energy. And now we're getting a breakout to the upside on another burst of energy. So we like the euro here. Everything is going the way it should. EMA is rising. Parabolic SAR is rising. The only thing we don't have is this RSI is just, it's showing us, okay, well, it's not like a rocket ship right now. The RSI isn't really pushing higher. This is a +2. So euro definitely looks like a tradable currency over the next 24 hours. Now the pound had been doing the same thing. The pound, again, big burst of energy, and then we get a little bit of a pullback, relieve some of that pressure, build up more momentum, we break higher, and you can see that we have now had a pretty decent pullback here. We had a pretty decent pullback over here, and we've got a pretty decent pullback going on right here as well. As you can see, the last pullback was a great buying opportunity. It was a fantastic buying opportunity in here. We ran up to some new swing highs. Here's a question. Is it going to be another good buy opportunity? We don't know, but this is a bull pullback. But what we do know is these candles that we're getting right here aren't really shouting out that there's a ton of momentum. Look at the candles we got over here. These are much better candles showing that there's going to be a big jump. Now this was over the weekend, so this was on Friday, this is on Sunday. But you can see after just 2 little candles, we start to get some good steep movement here. I am not ready to jump in on pound until we get some nice steep movement, and it's just not here right now. So I'm going to 0 on pound because it's just not showing me anything. If we start to get some nice green candles, I am ready to jump back on board the pound. Until that point, I'm just a spectator. Here is Canadian dollar, as I talked about earlier. It hasn't been going anywhere, and you can see it's not going anywhere. I'm not even going to score this. It's just a 0, not interested. And let's take a look at the Aussie. The Aussie made a big move down, and look, this is what it's been doing here lately. It's been strong this week, but when we take a look at this on a longer term, we're really still in a low base. What we do have, though, is we do have this EMA is starting to turn. You can see we're starting to flatten out, maybe turn up. The Aussie really has to break out above this line here before I can say, hey, you know what? Maybe that was a bottom. Until then, I have to just say that this is likely a bear rally within a low base, and I should be a seller up here at the top. Now, this could actually coincide quite well. Let's say the market runs one more day, the Aussie comes up to this line, and then the market tumbles on Thursday and Friday, this would mark a great short for the Aussie. That's exactly what happened last week. Exactly what happened. Strong the first 2 days of the week, had a rally up to the top, and then fell right back down. Right here, right now, the Aussie is showing like a +1. Showing a +1 means it's got more strength than weakness right now, but not a whole lot. We come over here to the Kiwi, and you can see here we have a totally different story. We have a steep EMA here. We've got rising parabolic SAR. We've got an RSI up here at about 60 and looks to be turning up. So this is a +2. This looks good, but we cannot ignore that we do have some overhead resistance here. So if we take a look, we're running up into some overhead resistance that we had back on the 5th of October. I really want to see it clear out of that before I really say, hey, you know what? This has been a major trend change. If we can break above this line, you can see that we've been in a downtrend since August 12th. We've been in a downtrend. This could be some good bottoming action, a little double bottom here. If we can break out of this area, I may be more constructive on the Kiwi long. But right here, right now, if someone said, hey, you've got to make a trade on the Kiwi, you have to make a trade, I would go long because that's where the momentum is right here, right now. So let's take a look at our velocity score and where the currencies stack up. First thing to note is that our cryptos all get a downgrade. They were starting to show little signs of life, and then that pretty much went away. So we're just not interested in cryptos right here at all. And really the only other change was the pound that was looking a little bit stronger. It had a pullback, and the Kiwi that was looking like it just had a pullback had a run. At this point, we're not left with a lot of currencies moving. We really have 3 currencies that we can take a look at. Kiwi and Euro long and Yen short. Let's go ahead and jump into the charts and look at some possible setup points for these trades. Let's take a look at Euro Yen because this is the currency cross that we talked about in our currency room over the weekend. And we really liked it because it was showing some good strength. This is a 4-hour chart. Let's take a look at a 1-hour chart. So we talked about this trade back here over this weekend. We said, hey, we like this one on a breakout. And you can see that we based and then look at this nice breakout right here. Nice breakout. I know we had some traders jump on this Euro Yen, so great job on this. You can see that it basically has based for another probably about 24 hours here. And when we take a look at it, we can see that we had this big burst of energy, and then we went sideways for a long period of time. We're now breaking out above it. So this one, to me, looks like a buy right here. However, if you're expecting this to be a rocket ship, you can see that it's not. It is not a rocket ship in any way, shape, or form. And it's really just because of the time of day. This is early in the Asian session that I'm recording this. I expect the velocity to grow a little bit more. So I think later on in the night, we'll probably get a little bit more velocity. But to me, this one looks viable right here. If you're willing to just let this thing creep higher, I think you want to have a stop, maybe down here at 146.85, maybe a little bit more. That is fairly tight here. That's about a 30 pip stop. That's actually too tight. So use your other, methods like ATR or anything else. But Euro Yen to me looks like a buy. Now let's talk about this cross. So if you were going over into the overnight session and you're saying, I don't think equities are going to retain their strength as much, this is the right trade because the euro is less volatile than the Kiwi to equity market fluctuations. So if equity markets pull back, Euro Yen is going to be the better trade because the Kiwi is highly correlated to equity market moves. So if equity markets fall apart over the night, it's most likely going to take the Kiwi with it. However, if equities stay strong, then Kiwi Yen is a much better trade and a much better setup. So let's go over this here. We can see the same thing. We get this big burst of energy, and now we're getting more sideways action. We got a little bit of a run there just for a short period of time. You can see it's pretty much trading sideways here, but we are coming up to this point again, and you can see the momentum starting to build. The RSI is pulled back. It's starting to creep back up. Everything here tells me that this is likely going to go higher. The only question is, if equities stay strong overnight, this one's the one. And again, the buy point is 84.90, right where it is. Put a stop down here below 84.40. that's the trade. And if equities stay stronger over the next 24 hours, this is going to be a really nice trade to the upside. If you are a little bit worried about equities, then we think you want to go with the euro yen. Other than that, all the other currencies aren't showing you that they should be traded right now. They're all just showing you they're going nowhere. So sadly, this is the market. We have a saying at Maverick, trade the market in front of you, not the market you want it to be or think it should be. Just go with what's literally the market in front of you. Right now, it is Kiwi and euro long against the yen, and that's it. Nothing else. I personally believe that the equity markets are likely to continue moving higher, especially over the next 24 hours, until we get up to that 3,800 on the S&P. So I like the Kiwi yen trade better. However, if you're a little bit worried and say, hey, you know what, I don't believe in the equity market as much, look, do euro yen. If the equity markets move up, both of those trades will be winners. The Kiwi will just be a bigger winner than the euro, but they should both be winners. If the equity markets fall, all of a sudden, now I think you actually have a chance still being profitable on euro yen, where I don't think you have a chance with Kiwi yen. So make your trades accordingly, but I think those are the only two currencies crosses that you can look at trading here over the next 24 hours. That is the currency recap. Thanks for joining us. Goodbye.